So on the international side, given that the spread is typically much higher, we talked about people making in normal times $1,500 on a shipment, and in COVID times making a lot more. Is the threshold for having enough volume to negotiate, is that much lower than the 50 to 100 that we're looking at the domestic?
Okay, so just to go back and re-explain like what it was like pre-COVID on profitability for these containers, we're talking about $150.
Oh, really?
That was
Okay.
our flat piece that we were looking at. And given we could make a few extra bucks left here and there, but it wasn't as massive as what we were seeing during COVID. Now, when it comes down to obviously the negotiations, we're back in this period where ocean rates are $1,500 to the West Coast. So we're back to pre-COVID times. There's not that much room for negotiations. It's similar to the domestic market where you're talking about a few $100s in savings, maybe $100 here, $150 here. But for the most part, we're been like a race to the bottom as the market softens. When it comes down to, there's another option of being on a fixed contract with your freight forwarder. And those negotiations normally take place in around Q1 to Q2, where the contracts are being signed between the freight forwarder and the ocean carriers, where they'll actually put in a client specifically onto the contract and lock them into a rate with a floating bunker. Bunker is like the fuel. Obviously, they don't want to eat the fuel costs. In that case, if you're moving about 2 to 3 containers a week, you can probably set up an agreement with your freight forwarder to lock in the rates. So when we're looking back a year ago, where rates were still around $15,000, there were situations where people actually were locking in those rates because of their worry that we were going to go back into $25,000. And what that caused a situation was these contracts actually were for 1, 2, and 3 years of locking in rates of $10,000 because you're like, oh, I'm going to save $5,000 a container. Those contracts actually had like clauses within them advising that if they missed a shipment on a week, they would have to pay 50% of what the container cost was on the contract. So you'd be $5,000 out, even if you missed the shipment or you decided to go with the FAK or spot rate market at the time. So it was basically a robbery by the ocean carriers because ocean carriers made these contracts. Freight forwarders didn't make these contracts. Freight forwarders advised a majority of their clients to stay away from these contracts, even though that there were some cases where they were signed because of the fact that the client wanted them so bad because they were worried about where the market was going.
And so what you're saying is there could be some brands today, some big brands that are still paying $10,000, $15,000 a container because that's what the contract says, even though we are 2 years away from the peak.
If they haven't been able to renegotiate that contract and buy themselves out of that contract, then there could be a possibility there are still some people that are signed to those contracts.